Hello, good evening, everyone. Good morning, good afternoon, wherever you're watching from. Today is the 3rd of August. How fast the year is running. Right, okay. So now we have our weekly trading digest, which will be kick-starting, or we've kick-started. We'll be going on the chart soon to do some digestion on the charts. Okay, so excited to have you here today once again. Wherever you are watching me from, welcome. And if you can hear me loud and clear, please let me know in the chats. If you can put a Y in the chats, let me know you can hear me loud and clear. Let me know if you can hear me loud and clear. Okay. Alright, so we're going to be looking at the charts today and then digest and also have a look at last week opportunities, what we had in mind, what we planned the previous week, and see how it played out. Yeah. Just going to wait a minute so for more people to join. Okay, great. You can hear me loud and clear. That's good. Okay, welcome once again. All right, as we always do, I will first of all do some illustration before we go on the charts. Okay. But before then, as we go along, if you have any question, you can put it in the chats, and I will read along and then see how we can handle that or answer that. Okay. Great. Nice to have you all here today. I'm excited. All right, let's go. Let me pick the part 2. Okay, so as we do always, I'll quickly go through some illustration and then we'll crack on. So okay, so we might have it nicely presented here or illustrated with this part 2, but on the charts it might be a little bit different, or it's always different anyway. Anyway, so just a quick run through of this and then we go on to the chart. So we have here a scenario where price is making higher high, it pulls back. So this is the impulse move. It pulls back, correcting the impulse move, or in a correction mode, pulls back, creating lower high. So this, let me pick so this here is higher high as we represent it by HH. Then this here is higher low. The same thing, higher high, higher low, higher high, higher low. Then it gets to a situation where price begins to consolidate or move sideways or move in a range. So in this situation, this is where orders are being filled, because what happens here is, or the idea at the consolidation state is, the big players, being the bank, the large institutions, if they want to buy or to sell put in their orders, most cases they can't do it all at one go because they have large volume of orders they want to put into the market. So in the accumulation stage, that's where this happens, where they will buy it in bits. So they know that the markets will be going down from this point on, or could be going further up, continuing the trend. So in this analogy, we have this accumulation state or this consolidation state, the markets change direction to the downside. So from here onwards, we can see that accumulation is taking place. That's why it's consolidating. So they are putting in their orders one by one. So some people will be here buying the markets, and the big players will take their orders from here. Said, I like that, give me that, because these people want to sell from here because they bought it low and they want to sell it at high price. It's the same way we have it just in any industry. You buy at a low price and then you sell high. So if we put this here, this tool here, so we have the green portion being the discount zone, and the upper portion of this above the green portion is the premium zone. So if a buyer buys from the discount zone, that buyer wants to sell off at the premium level, which is the upper part here. So once they buy it at the discount price, they want to, once price moves to the premium or expensive zone, because they've made so much money on what they bought it for, they want to sell it off. So the bigger players will be sitting here, be taking the orders one after the other as it comes in, until they have had enough and they will hit it hard. That's where we'll see the move begins to change. So from this point on, as we started from this point here, we can see that there's this break of structure. Let's put this. We have break of structure here. So as we do always, anytime we spot a break of structure, we want to take it to the origin. So we want to go back to the origin of the move. So as we were talking about, we said price has been making higher highs, higher low. That's a typical criteria of an uptrend. So our business is to identify these break of structures and then originate it. If I say originate it, we go and look for the origin of that move. So the origin of this whole impulse, this impulse move that broke this structure here, is from here onwards. So we mark that area, and we want to see some form of imbalance attached to this zone that I've just marked. That will be the demand area. Since price is going up, we are only interested in buying the markets. So from this point on, we want to see some form of imbalance attached to this demand zone. So it will now become imbalance demand zone. Where is my, so this is what we want to see here to make the demand zone valid. So as we identify this break of structure, we want to see price coming back to either fill this imbalance here or this inefficiency located along with the or near the demand zone, then continue going up. So this is as I said, this is an illustration, typical illustration for what happens on the charts. As I always say, let's do things with understanding. If you understand what you are seeing or what is happening on the charts, it makes more sense than just going through it without a better understanding. Just as the Bible says, we should do all things with understanding. We should get understanding with all that we do. So this that we are doing, we are getting the understanding why certain things happen. So if we have price pushing up, coming down here, we at least know that it's coming for a reason, to fill some imbalances or to get some job done, to clear some liquidity. So the things that draw price are imbalances, liquidity. So if there's any liquidity here, we'll see price coming back to clear those liquidity. Okay, so let's go back. Let's continue our this discussion up here. So in this level of consolidation where orders are being filled, we also will see that price will create equal highs, equal lows. So at this instant, most cases you will see that before the move begins, there will be a clearing of the liquidity above here. So the others, those who maybe put in sell from this point on, will have their stop loss right above here. So as I always say, if you don't identify the liquidity, you will now become the liquidity. So before you get into the trade, do well to identify an area of liquidity, or where it's most likely there's going to be a sweep of liquidity. So sweep of liquidity will always, or most of the time, happens where you identify equal highs or equal lows. So over here we have price at least sweep equal highs above here, clearing the liquidity above, and then we had a break below this low, the last low here. So here we will have change of character. Let me clear this off. So here we're going to have a change of character or market structure shifts, which is the same thing. So change of character here. So once we have the previous low point cleared, we now have change of character. So after the change of character, we expect price to come back to the origin, to at least to fill some imbalances. So this is our supply zone up here. So if it's going up, we have demand zone. We are interested in imbalance demand zone. If it's a downtrend, we are interested in imbalance supply zone. So over here we have so this is what we want to see attached to our zone. So we had a break of structure or change of character. So we want to trace it to the guy who caused the change of character, this impulse move that caused the change of character. Initially we were uptrending, and now we've changed direction or shifted to the downside. So we have to trace it to the origin. So the origin is where the move started. So we take the last candle. It could be the green candle or the red candle, whichever colors you use, to mark the supply or demand zone. So from this point on, we identified and we expect price to pull back to this area. So this is where we target to take our trade. So if it's a downtrend, we are only interested in taking our trades from imbalanced supply zones. If it's an uptrend, we are only interested in taking our trades from imbalanced demand zones. Okay, so with that said, from here we're interested to take our trade from this point on to the previous high. We look left, structure will always leave a clue. Our stop loss goes below the zone. We take so these are all examples how we'll do it. Stop loss above the zone, and then we take it to the previous low points. If you look left, you will find structure points to take your trade to. So normally you should have 1:2 as the baseline. Risk reward ratio 1:2. Okay, so so that's a quick illustration of what we do, how we do it on the charts. So we'll go straight back into the charts. So from here, let me put one thing here. So after the break change of character, we will also identify this as break of structure. If you want to take another trade, you identify anytime you identify the break of structure and then or change of character, and then you locate it to the origin. So we have break of structure here. So the origin will be from somewhere here. So you mark out on your chart and then wait patiently. So now let's go on the gold chart and see what happened last week. How all our pending zones got hit or got filled. So this is gold. Let me clear this area a little bit. Okay, once again, welcome everyone. Welcome. So excited to have you here. Okay, we have on here let's see. Okay, let me clear this chart a little bit, clean it a little bit, clean it, make it clean. Okay, great stuff. Okay, so we had this pending areas that we needed price to tap into. So from this is the 4-hour chart. So we had this, we marked some weeks back. On the charts. And then last week we had it fulfilled. Yeah, I think it's this zone. Okay, let's clear this out. If you have a question or a pair that you want me to look at, you can put it in the chats as we go along, and then we will do justice to it. Okay, so this is a demand area we were looking at. Okay, so let me just see how I can identify some imbalance area attached to this. This is okay. Okay, so we have these areas, we marked it some weeks back that we were pending, waiting for it to play out. Let's see, I think it was wider than this. Let's see what was here. Okay, 4 hours daily. All right, so the bottom line is we marked this area some weeks back on the charts, and then we have price tapping into its yeah. We had price coming back to fill the imbalances along the way. I deleted the markings earlier on, so we have some imbalance here. Imbalance demand zone. Imbalance. So we had this pending area. Let's make this bigger. Yeah, we had this pending area here. That was our last pending area we put there. And then we also had some areas here. Where is mine too? Yeah, we had this area as well, also being filled. Okay, so attached to this, there's also imbalance attached to it here. That we have all of them filled now. So we had all of them filled. Okay, so we can see how price after many days. So this happened from Monday 30th June. That was the last time price came to this area, and then since then it's been going up down, and then lo and behold, it came back to do justice to the job that was here, clearing all these liquidity areas that was left out. So we see how price from this point on move all the way to this area that we marked. So this last week we had this as a pending area. We are waiting for it to be tapped in, and then that is exactly what happened. And then straight after see what happened. So straight after we had price completing this job here, filling the imbalances here, and then straight after pushed up, giving us, this was the first impulse move, or this was the to complete the job. This was the first leg, if I should put it that way. Price pushed to the 20 moving average area, gave us the second leg, third leg, and then all this was happening in the zone. All this was happening in the zone. So if we look at how price was pushing down with this large size candles, pushing down, and then we had a retracement, and then a push down again. So this in itself, let me take this out. So this is a trade that I took last on this pair. Okay, so we have here, so this is the come on, yeah, so this is the first leg or the impulse move. This is the retracement, creating higher low. So this was a downtrend. So in a downtrend, price creates lower low and then higher low, lower low and then higher low. That is the criteria or the characteristics of a downtrend. Higher low, lower low, higher low, lower low. So this time price was not able to beat the previous record to create a lower low here. So once this happens, and happening in a zone, happening around the 20 moving average, happening in a zone, I'll repeat that again. As I said, we are only interested in taking our trades from the zone. So this move here, we can see how price first of all in the zone engulf this candle here, even though it was it engulfed the body of the purple candle, but not fully engulfed the whole wick as well. But again, this was happening in the zone. We had another opportunity here where we had price completely engulfing this previous purple candle in the zone. So we had this push down to complete the job here. Price pushed up, failed. So this is a failure swing. It failed to beat the previous record. That should tell you a lot. And this is where I'm more interested when I see things like that. This is where I go in and go in and go in big. So after here, we had this change price giving us a beautiful event, bullish engulfing candle here. Bullish engulfing candle here. And then from there, look at the move that happened. I know some of you caught this move, which was beautiful. I saw the results, which was beautiful. So this is what we want to engage in. So even though this was a news event, the non-farm payroll event that pushed price to this level, it completely followed technical analysis. It completely followed price action. It followed what confirmed what we were following on in terms of the price action analysis that we did here. So even though this had a power, so most of the time we can see that before these moves begin, there'll always be accumulation or consolidation. So this consolidation is where orders were being built before the big move. The news came just to confirm where price is going. So in most cases, you will find that once you do your analysis and you do it right, even if there's a news item, the news item will play it out to confirm your technical analysis, Okay, so that's gold. That one is done and dusted. So let's look at what we can see on gold now. Okay, someone is asking, when drawing the imbalance, do you consider the body or the wicks? Can we have an illustration using wide candles, please? Okay, we'll let me. Okay, before I go into it, let me answer this question. Let's see. Said, when drawing the imbalance, do you consider the body or the wicks? So let's do a quick illustration on how to identify imbalances. Can I get a tool that? So in identifying imbalance, you need a three candle. You need three candles to identify imbalance. So we have first candle here. Okay, since this is green, let's do an upward move. To okay, so this is too big. Okay, so let's do a quick illustration on how to identify an imbalance. A quick illustration on how to identify an imbalance or mark out your imbalance. All right. So over here we have these three candles. So this is candle number one. We have a situation where price is going up, so we want to identify imbalance. So this is the wick. This is the wick. So the wick of this candle traded all the way down here. So let's say there's another candle prior to this. that the wick also was here. So we have this wick here interlocking with this one, so that makes it efficient. There's no imbalance associated here. There's no imbalance associated there. So let me take this out. Yeah. So now we have other we are focusing on these three candles, 1, 2, 3. So this is the how high this candle, the first candle here. So this is candle number 1, candle number 2, and then candle number 3. So this is how high the wick of this candle came. So price opened, this is an uptrend, so let's say price opened here. This is the body of the previous candle. So price opened here, pushed all the way to this high, and then made a small retracement and closed here. And the next candle here opened here, pushed all the way to complete the job here, to fill the gap here, or to make the market efficient by trading into this wick to make the market efficient. Now from this point on, this is the second candle. The second candle did this push down, maybe opened here as well, pushed up a little bit, and then closed here. So let's we have to change this one. Yeah, so that makes the illustration much better. So it closed here, and the third candle also opened here. So this is the high the second candle got to here, and then the first candle, this is the high it got to, and then the third candle also opened here, pushed down here a little bit, and then continued going up and closed here. So now what is the area we are interested in? So the area we are interested in is this gap here, from this wick here to this wick here. That is the area of imbalance we are interested in. That is the area of imbalance we are interested in. So what we do is we pick the high of the first candle to the low of the third candle. So this now becomes our imbalance zone. This now becomes our imbalance zone. So this is where the market wasn't efficient. The market wasn't efficient. So when the market is efficient, you see price trading into each other, interlocking with each wick. So we had the situation here where price traded here, and the second candle also traded all the way down here just to fill this imbalance here, and then continued going. So this area is what we are interested in. This is the imbalance zone. So I hope this answers the question. Do you consider the body or the wicks? So I think this answers the question. All right. Okay, so let's go on. Let's look at gold again and see what we have this coming week. Let's clean up the charts a little bit now. Oops. Let me know if that is clear enough in the charts. Let me know if that is clear enough in the charts. All right. So gold. So before let's look at it. Let's do our top-down analysis. Let me clear all these things to make our chart a little bit cleaner. Okay. This has all been played out, so let's clean it to make the charts cleaner. Okay, we'll leave this for now and see what's, because price is just around here, so we'll probably extend it. So over here we had imbalances here that got filled. It was partially filled at this level, and now this move totally filled the imbalances that was left here. All the ones along here has also been filled this here. Okay, let's mark out this imbalance here. Let's take this out. So we want to focus on the most recent price action. We want to focus on the most recent price action. So we had a break of structure here. We had a break of structure right here. Just as we did on the illustration, this is a break of structure. Break of structure here. So where is the origin? We ask ourselves, where is the origin? So the origin is this last candle before the impulse move that caused the break of structure. So we pick on this last candle here. We extend it to the right. We extend it to the right, so that becomes a supply zone because it's a downtrend moving downward. So that becomes our supply zone. So attached to this supply zone, we aim to look for some area of imbalance. Let me enlarge this a little bit. Where is the, yeah, let me enlarge this area a little bit so that we can all see it. So in regards to the question I just answered, okay, so we have this supply zone marked out, and then attached to this supply zone or near to the supply zone, we have this imbalance here. This imbalance right here. This is an imbalance that we require price to come back to fill that. And we have that filled? Not yet. Not yet. Not yet. Not yet. Okay, so we have this pending area that needs to be filled in. And then look at all this here. This is what we refer to as liquidity void. Liquidity void. Liquidity void. Whenever we spot this kind of big areas, do I have liquidity void? Okay, yeah, so we have this liquidity void area here because over here there was no seller's action here. The buyers completely was in control of this move. We can see there was no sellers here present here. So this is what is called liquidity void. So most of the times when we have this kind of liquidity void, we might have price trading back into it, and in most cases when it's trading back into it, it will take a halfway and then push up, leaving the rest for another time. Leaving the rest another time. So if this is aiming to continue going up, we at least anticipate price trading back to fill halfway of this before it continue pushing down. Or price action, it could trade all the way down here, to fill this gap, this liquidity void here. So let me introduce something different to you guys. I know it might be something new to some of you, or some of you it's just a refresher. So over here we have price pushing down, making this first leg, first impulse move, retracement. So in this retracement, we had price making the second leg where it failed to beat the previous record here. Price failed to beat the previous record here, which we already know why this was, because the job here has already been done. The liquidity on the left hand side of structure has been cleared and tapped into the fair value gap or the imbalance area, filled it and then turned around. So here we had price failing to beat this previous record, and now this is what most cases you'll find that price will trade back to this area, not fully to the demand zone or fill any imbalance here, but will kind of trade back to this area and then turn around and continue going up. So I want to explain why that is, or why that can be. So with that said, we have a failure swing here. So with this failure swing, we have this last candle here. Last candle here. Let's mark this out. So this last candle, then most cases you will find that price will trade back to this area and then turn around to go up. So that's a possibility. So whenever you see price, maybe you mark your imbalance, you mark your imbalance demand zone here, and at least you are expecting that price will come to this area for you to get a fill to the upside, for you to get a fill to the upside. And then price might not do that. Price might not do that because of this mitigation block here. So in a situation where, in the absence of a mitigation block here, then we have the option of price going all the way down here. But again, if we look at from this point, from this area that we marked as our demand here, price is fairly efficient up until here. Price is fairly efficient up until this last candle where price began to push up. It's efficient up until here. So this is a zone that we most likely will have price trading to before, if it wants to continue going up, continue to go up. So that is a mitigation block. So in a situation, let me draw this, let me illustrate this as well. So guys, we are here, as I always say, we are here, we are learning and then making moves from here. So what we are learning over here, I want you to also be able to do it on your own. So even as we want to identify potential setups for the week, I will also be so glad to have you do this on your own. We'll also be so glad to have you do this on your own. So as we go through these things, it's a learning time and also time to pick some trades. So let's go through this and then we'll. So we have this illustration I made here. We have price pushing down and then coming back and going up. So in a situation where there's a failure swing, this is where it's known as the mitigation block, the last candle before this move started down here. So in situations like this, you target this area. This will be your target area. So if this area happens to be broken, or that record is broken, so we have a situation, another situation where price make this way and breaks below and come back up. So now this is a mitigation block. Let me label it properly. That's a mitigation block. So in a situation where this price is able to beat this previous low, beat this previous record, it now becomes a breaker block. So let's label it for better understanding. As I always say, do it with understanding. In all thy getting, get understanding as well. This happens to be breaker block. So this is a breaker block because it's broke below this area and then turned around going up. So in a situation as we have on gold now, we have a mitigation block scenario. So if price had pushed all the way from here down here before making this move up, let's put it this way. So price making its way up, traded up to this high. So on its way back, it's looking for these institutional reference points. So one of the institutional reference points is this mitigation block here. So as it makes its way back, making its way back to, if it's going to go up, it's making its way back to the area we act from this level to the upside. So if we have all this in mind and it's playing out, we are more prepared. So at this level, if price gives us any sign of reversal going up, we're going to hit it from here. Where is the, yeah, so from this level here, if price gives us any sign of reversal to the upside, that's where we hit, we take the trade from this level. If not, if we don't get our entry set up from this level and the price continue to push down, we will now target to look out for our entry model or entry setup from this zone here to the upside. As I always say, we trade what we see. We are not trying to predict. We are not here to predict the market. We are here to trade what we see. So if you don't see it, you don't trade it. You don't trade it. If you don't see it, you don't trade it. So this is what I'm looking at on gold currently. I know there's this here area here to be filled. Price could complete this job here. It could complete this job here, fill this imbalance and tap into this zone here, and then pushing down to this area for a retest, and then push up. As I also always say, no retest, no entry. No retest, no entry. So if you don't see a retest on, you are not taking any position. Okay. Okay, someone is saying, what time frame would you normally chart the imbalance? It's currently on. It's a 1 hour time frame that is currently on. As I always say, you do your top-down analysis from the weekly, daily, 4 hour. So those 3 time frames will should give you the direction. So at least if you have 2 of those time frames in sync, if you have 2 of those time frames in sync, that is a way to go in that direction. If you have 2 of those time frames in sync, that's a way to go in that direction. So because the higher time frames always carries more weight than the smaller time frame, so you use the weekly, daily, 4 hour to help you to identify the bias or the direction that you want to be trading. Okay, so from the from 2 hours down, you're looking to be taking your setup, your entry setups from there on those time frame. So I hope that gives or throw more light on that time frame issue. Okay, so now let's look at the bigger picture of what we are looking at. So we can just maybe start from monthly, see what is happening. Just a quick view. We are not trading on monthly. We are not taking any trade on monthly. Okay, let's take this out. This is just to have a clearer view. So on the monthly, I just want to throw this to you now. In doing your top-down analysis, you can start on the weekly, that's fine, but you can also just have a look at what is happening on the monthly chart. So we have price doing this here. So what I will prefer you do on the monthly is just mark out those monthly high areas or low points and then clearly identify it. Let's take this out. So I will, for this, I would mark this area, this from the wick on the monthly time frame. I'll just pick on the wick, the last high there. That should be my area of interest, and then I will mark it as a monthly key level supply. Okay, so I'll mark this area as a monthly key level, and then on the other side I can also see here that this area happens to be a very key level on the demand side. So I can also mark out this area. So it kind of gives us a dealing range, or an area, to a wider area to look out for, even though price is not just going to push to these zones anytime soon, but we want to have those areas marked out on any chart that you are, or any pair that you are looking at. We're doing the top-down analysis, so this I'll mark it as a monthly key level demand. Yeah, so with this marked areas in place, we can see, if we even look left, structure always leave clue. So if we look left, we extend this to the left hand side, we could see how price also got to this area, snap down again, pushed back to this zone, snap down, pushed back. So this is a key zone. So for instance, anytime in the future and price is making its way to any of these zones, you are more likely to know, or you have a what do you call it, a high probability to have a reaction from that zone. So these areas here on the supply side happens to be the all-time high. So gold hasn't been here before. Gold has never been here before. This is an all-time high area or zone, but we have this area that gold has been here. So anytime, for instance, we're making our way from this level to this zone, we know this is a very key zone that we wouldn't play at all with it. So if we are here looking at the chart and then we see any sign of reversal, we'll jump into it with much more confidence than anything else. Okay, so that is just on the side. With what we are looking at. So let's go back to our regular weekly time frame. So that same area also represents the weekly area that we can see there. Weekly area we can see there. So so as we can see, we have price. It's a bit unclear here. Let me try to enlarge it because of my marking on the chart earlier on. Is it making sense, guys? Is it making sense? So from this push up, as I explained in the illustration, can we see what is happening here? So this is a weekly time frame from the earlier illustration I made, where we can see price making higher high, higher low, higher high, higher low, and now it's in a range. This is on the weekly time frame. Price is ranging. So price is ranging in the weekly time frame. So from this point on, there are two things that could happen. We could have a break above here to create new highs, or we can have price pushing down here. But what we have to always ask ourselves is there any business price has got to do down here? Is there any area of imbalances that price needs to tap in to fill? Are there any areas of liquidity that price needs to come back to sweep for more energy to push up? So we can see here on the weekly time frame, price has created this area of liquidity. So liquidity areas are areas that buy orders, stop losses in short, where on the downside we can see there are some areas that needs, or some liquidity areas that needs revisiting in terms of what price wants to do, but that is not our focus now. Our focus on the most recent price action. This is the weekly time frame. So the weekly time frame currently is telling us we are bullish. So we are bullish on the weekly time frame currently. If you look at the last candle here, so that is what we can see. So we have the monthly telling us what? Bullish, weekly bullish, daily. Let's look at the daily time frame. Find this zone on the daily, we can even have it much better look like this. So on the daily, we have just refined the monthly zone as this, and then look at how many times we have had price tapping into this monthly area of supply, or whatever you call it. So we had the first tap, second tap, third, fourth. So as we have now, this is like, if price gets to this zone, it's like the fifth time it's going to be tapping into this area. So as I said, we trade what we see. So the scenarios that we have built earlier on the smaller time from the 1 hour, it can play out that way, or we can have price pushing or continuing to push to break above this area. So this area also, we can see the liquidity resting above here. That is something to draw price on to clear all this liquidity. If it wants to go down, price will most likely do this. Price will most likely do this. On the longer run, on the long term, price will most likely to do this, push up above to create a new high. Once we get a new high, come back for a retest or any form of, just play around a little bit, then push up to target all those areas of liquidity down here as well. So we can see how many times price have been tapping into this higher time frame level key area, and it's been rejected. So as we had the illustration on the earlier on, this is a place that others are being built, and then before the big players might hit it, they might take out all this liquidity resting above here before it pushed down, or it will come back here, clear all this liquidity on the daily before pushing up. So we always will look out for what we are seeing, and then we'll trade according to that. So okay, so let's continue to refine this, and then we'll, somebody say BTC. Okay, we'll look at BTC. Let's finish with this top-down analysis on the gold, and then we'll. So so currently we have price pushing up. So we have 3 time frames telling us bullish, right? Am I correct? We have 3 time frames telling us bullish: weekly, monthly, daily. And then let's go to the 4-hour time frame. The 4-hour time frame. So on the 4-hour time frame, we had this downtrend making higher highs, making lower lows and then higher lows, lower low, higher lows. So on the 4-hour time frame, we can see that we clearly have a shift. So this is the initial shift in market structure, or change of character, as we broke this previous high here. So we had a change of character here, and then also have price taking out the high, clearing every liquidity up here. So we also have this area as break of structure, BOS. I hope you can see the charts looking a little bit too much. Let me clear some of these things. Okay, so I think I explained this in the one. So we have this change of character here. So with this change of character, the origin of this move, we can identify it. So we're now trying to mark our area on this chart. So this, we've been, as we have notified, or we have identified on the 3 time frame, that price is in a bullish market. So we are only looking for imbalance demand zone to buy the market, or to buy into the thing. So we have this break of structure here, or change of character. So we have to look for the origin of this move. The origin of this move, we'll put it from here. So attached to this origin, we have this big liquidity void here. So that makes our zone valid. So this, as we have marked here, well, all we have to do is to further refine it. We go to the smaller time frame to further refine the area, or what we are trying to do is to zoom in into the chart. We are zooming in to find a better risk reward area to take our trade from. So this is a 2-hour time frame, and then 2-hour time frame, we will further refine the last candle to be here. Will still be this candle, this same zone here, and the imbalance, so currently from this point on, it looks to be so efficient. Let's look out. There's something we can even spot out on the 4-hour time frame. So if we can see this, let me zoom out, pick this area. So this is the first candle, third candle, and the first, second, third. So this is the wick, the high of the first one and the low of the third one. So we have a small imbalance right there. So no matter how small it is, once it is an imbalance, we pick on that. So that is a small imbalance to be identified on the 2-hour time frame. Okay, so we go to the 1 hour. The 1 hour time frame is this we see here. So on the 1 hour time frame, we will refine our demand zone to this area. So on the 1 hour time frame, we can actually, all this area looks to be efficient up until this liquidity void area, where price pushed up all the way without any action from the sellers. Okay, so on the 1 hour time frame, that's what we're seeing here. The imbalance is right here. So we can further move to maybe, so you do this until you get to your trading time frame. So our trading time frame here is the 15-minute time frame. Wow, it's already an hour gone. Wow. Okay, let's see how we can quickly crash through this. So in refining our zone, this is the zone that we marked on earlier on the 4 hour, starting from the 4 hour. So we can refine it to this area, we find it to this area, and then as we can see on the 30 minutes, we can clearly see the imbalance that we can spot here. The imbalance we can spot right here on the 30-minute time frame. Okay, so on the 30 minutes, that's what we have: imbalance demand zone, on the 30 minutes. We have some imbalance here that we identify on the 4 hour or the 2 hour time frame here as well. So if we targeting or we mark this area, at least it will be a pending area waiting to be tapped in, just as we had price tapping into this area that we marked some weeks back, that it's fulfilled that tax and then started pushing up. So this is the most recent price action that we are interested in. This is the most recent price action that we are interested in. So we can further go to the 15 minutes to see if we can further refine the area. So that on the 15 minutes, this whole area, we can refine it to this high. We can push it down to this. So, and the imbalance area also would be most likely the same area. So yeah, so we have this zone here. So we have this area here on the 15 minutes. So now this will be a pending zone that we anticipate, or we expect price to come back to fill this imbalance before pushing up if it wants to go away with to make higher new highs. Okay, so on top of that, we have this mitigation block that we marked earlier on. With this mitigation block area as well, we can also further refine it to this last piece here. If we want to refine this, this can be the zone. That is the last candle before this swing, this failure swing that wasn't able to beat the previous record here. So we can anticipate price pushing down to this area, and then we taking some action if we see what we want to see here, or with not what we want to see. We see what price tells us here. We are not trading what we want to see. Is that right? We are not trading what we want. Is that right? Am I making the right statement? Okay, the long and short of it is we trade what we see, not what we want price to do for us. It's what we see on the chart. That's what we trade anyway. Okay, so with that said, there's a high probability that price could react from here. Let's refine this liquidity void area as well. There's a high probability that price will react from here, push down to this low, and then push up. Or with this kind of momentum that came in, we could also have price continuing from this point on. We could also have price continuing from this point on, breaking above here, coming back for a retest. No retest, no entry. So if we have price pushing above this zone that we had it pending, if we had this zone cleared, if we had a retest and then it falls within our trading plan, we could aim for the next area of interest. So we have this area of imbalance that has been that's also pending. This area is also pending, and then coming back to the higher time frame key level. That's also have some imbalances, and then supply zone. So there's a high chance that if price breaks above here, we could be aiming for all these imbalances to be cleared, and then tapping into this zone again. And then from this zone, we'll see what happens, and then we'll trade from there. So those are the scenarios we can have or see on the charts. We can see on gold currently. So as we have marked out this way, we have a scenario planned. So you are not taking your trade anyhow. We want to see price in these zones. We want to see price in these zones. So perhaps price could also feel this imbalance here and begin to push down as as we have marked out here. But it's always a good idea to trade with the trend rather than going against the trend. So if the trend is telling us bullish, it's safer or ideal to go bullish as well. Okay, I think that's what I can see on gold coming this week. So as I said, we trade what we see. We are not here to predict anything. We are just trading what we are seeing on the charts. As price action gives us, or price tells us, this is how I want to play it, that's how we play it. Just as right before this move up, we were in this zone. So just to throw more light on it, this whole area was in a zone that we have marked earlier on. So you seeing a buy setup here in the zone, you are more confident to take a trade from here before all this move began. As I said, some of my guys took this trade and then enjoyed the move. I myself, I think I missed this trade. I was busy somewhere, so I missed this trade. But I'm happy that some of us got in the trade here at this zone before all this move began. So if we mark out the charts and then wait patiently, we will have these opportunities over and over again, without stressing yourself so much. And then if you look at it, if you entered here, it's hardly that this would have taken you into a drawdown. There wasn't any drawdown. Let's look at it. We'll look at BTC quickly. Let me just throw more light on this. Okay. So if we were to enter this trade here from this point on, there's a buy. If we're going long here from this point on, if you even took your trade from this bullish engulfing candle here, your stop loss, even if it was here, you would hardly have gone into any drawdown. See how beautifully it pushed up from here onwards to give this nice 1:5 reward, depending on the this 1:5 with this push down. This is 15 minutes here. So if this was your risk, you would have at least made 5 times the move if you're able to hold onto your trade. So you take your trade here. This would have probably been the next area, your target zone. So this is the next area you would have been targeting. So probably would have targeted 1:3, which is sweet. Okay, that's enough on gold. Let's look at Bitcoin before we zoom off from here. Okay, on Bitcoin as well, we have, let's quickly look at the top down analysis on Bitcoin. Guys, if this is making sense to you, put some fire in the chats. Let me see that you're enjoying this. Put some fire in the chats if it's making sense to you. This session is making sense to you. All right. So on Bitcoin as well, we can see on the weekly time frame, we have price making higher highs. So it's also bullish. So we can see from this low, we make this high here. Okay, made this high here, push down to this, then had temporarily pushed to that low. But in effect, we are in a bullish market on Bitcoin as well. So we had this. Let me just add this to this, make it 1 here. So we have this push up, creating this higher high, higher low, higher high. So currently on the weekly, we have this break of structure. We have this break of structure here on the weekly. So as we said, so on the weekly, on the monthly, weekly, if you want to start from monthly, it's up to you. But on the monthly, what I explained earlier on, what I want you to do is to mark those key areas just to be a pending zone. In case anytime price drops to that area, you know it's a monthly key area, which is very strong or powerful area to be considered. So with that said, anytime price come there, you are ready to fire from that zone once you see some nice setup from there. So we can see on the weekly we have a bullish run on the but currently we have price pulling down. So let's see, we on the weekly we can see it's a bullish run, and then moment in the time being we have price pulling down. So let's go to the daily. What is daily telling us? So on the daily, let's pick our part 2. So we have this being created on the daily as well, creating higher high, that so a shift there. Okay, so I'll pick this out and then we can see what I've marked out properly. Okay, so on the daily time frame, this is what we have. We had an uptrend here, price pushing up. We had the retracements where price also started the uptrend again, a continuation. So we have a break of structure here to continue the uptrend, So now as we can see that this where price is now, it's a zone that we've is it a zone or it's okay, I think it's I was marking this, let me delete this, as a discount and premium zone that I marked out earlier on. So looking at this now, we can identify that price left this area. This is a daily time frame, so this is an area of liquidity void, because it's quite a big area, a liquidity void area. So now we had this break of structure on the daily time frame. Okay, let me put this on the side here, we'll look at it later. So we have this break of structure on the daily time frame. So break of structure on the daily time frame. So we said we need to originate it. We have to go to find the origin of that place where price started from. So the origin, we will put it right here. And we can also, so this will be our demand area. So since we are in a bullish run, we identify price to be in a bullish run, we'll identify imbalanced demand zones. Okay, so this is a zone that we are interested in for price to at least come back and then take our trades from here. Since we had this break of structure, we have imbalance here, we expect price to fill. We have a liquidity void here that we also, it's filled. The liquidity void is filled here. So currently, as we can see, if we take in this as what we learned today, from what we learned today as well, this could be let's see if this is right. So if this is the first move, then we had this price breaking below, but we did not have close. Is it a close below? Yeah, so we had the price breaking below this previous point. So if anything, we anticipate price to, if I should lift this out from there, we anticipate price to come to this zone as well. So, and what we are doing, the more confluences you have in a zone, the better. So this here, if we say this broke below here, so we say it's a breaker block. So this can be a breaker block here, this area here. So that area also falls within the imbalance zone. If we should mark this as a breaker block, it also falls within the imbalance zone, which even makes it much better. As I said, the more confluence you have in a zone, the better. The more confluence you have in a zone, the better. So with that said, that is how we want to look at Bitcoin. So it's the daily is telling us bullish, weekly bullish, yeah, monthly. Did we look at monthly? Yeah, monthly is also bullish, even though monthly is also bullish. We have a small retracement there, yeah, but it's bullish. So let's go to 4-hour time frame. 4-hour time frame. So on the 4-hour time frame, this is the zone we marked earlier on. So all we have to do is to further refine it. So let's take out the, to make it clear, let's take out the mitigation area, and then we focus on this area first. So on the 4-hour time frame, we can further refine our zone to this area. Let me make it a little bit bigger so that we can see it's what I'm marking. So we're refining our zone. We had a break of or change of character. Is it a change of character? Yeah, it's a break of structure, because of already started the move, making higher highs on the 4-hour. If we start from here, yeah, if we start from here, we can see we've started a move making higher highs. So in marking this, I'm always interested in a data point that breaks out a structure. Data point that breaks out a structure. So we can see, if you see my crosshair, you can see this high is broken. We had a break of structure here, and then this high also is broken by this. So that's what we are looking at currently. So we can see on the 4-hour we had a pause here as well. So we can also this is another zone we'll be looking at. We can also look at this zone here. We can, so the actual break of structure we are referring to is here. So is this move from this zone here that we are interested in. So with this, we also refined our imbalance zone to this area. So that is the demand zone. We have an imbalance zone that's fairly closer, but if we go further down, we might be able to refine it to much closer. Yeah, so this, as we see here, we can see that from this point on, where price got to this point, we've been creating lower lows, even though it looks to be moving sideways. But if we look at it properly, you can see that from here, price got to this high, pushed down to maybe here, and then made it up to here, couldn't got to this high, push it further lower than this point, and then there again also below this area. Then now we have a break below this, clearing every liquidity here, So now we currently have a break of structure on the 4-hour time frame. So with that break of structure, we have to trace it back to the origin. So let's take this out. So we currently have a break of structure, and now I've marked these areas. Let's take this out to make it clear charts. So we have a break of structure. Let's mark out. Wow, 1 hour 30 minutes. We've been increasing and going higher and higher. We'll be finishing soon, guys. Sorry about that. So we have this break of structure. So with this break of structure here, that's a change of character. I suppose, no, it's a break of structure. I'll say break of structure. So the reason is we had this first push down to break here. So we had this first break below this low point right here. So that will be the change of character there. So after the change of character, whatever happens going down in the same direction is break of structure. So we have change of character and then break of structure here. So all we have to do is to mark the origin. So the origin of this push down, we take it from here. On the 4-hour time frame, let me take this out. Yeah, so this now becomes supply zone. Supply. So let's see if we can identify any imbalance attached to this area. Yeah, okay, imbalance there. So this is the 4-hour time frame. So let's further refine it to get a clearer. Let's zoom in. We are zooming in. We are zooming in to get a sniper area or zone. So we had this change of character here. The origin, we marked it to be this area. So from that on, it's all efficient. Let me take this out. Okay. All right, so we have this area marked imbalance and then supply zone here as well. So we are now on the 2-hour time frame. We've already identified this zone for price to come back to revisit, and then along the way we had this liquidity void that price has also partially filled. So currently we had a break of structure, change of character, and this zones hasn't been tapped in yet. So at least we expect price to tap in if it wants to come to complete this job here. So let's go to 1-hour time frame and see if we can further refine our zone. So on the 1 hour, we will take that last candle to be this one. Let me make it bigger for clearer view. So that is the last candle before the impulse move to cause the change of character here. Okay, so we now have this area, and now we can have the imbalance here marked out as well. So this is the first candle, second candle, the third candle. So we pick the low of the first candle, since this is a bearish move, and the high of the third candle, giving us our imbalance area. So we now have imbalance supply zone. Along here too, we have some imbalance here. So we have some imbalance here. So this is what will draw price to come back to clear this before it continue to the if it wants to go down. But looking at where price is now, let's see, let's look left of the structure and see what is there. Let me put a horizontal line right here. Okay, So as it is now, on the 1 hour we have something here. We have this structure, a change of character given us here on the 1 hour time frame. That's a change of character there. So with this change of character, we have the origin. We mark the origin to be this area. Okay, let's extend this to no, not this one. So this will now be demand. So this will be demand on the 1 hour time frame. So we had, as we said, we were considering the most recent move here. So overall we are in a bullish market. So if we extend this to the right, let's see, to the left instead, sorry, where do I have that option? Where do I have that option? Okay, I'm just going to put a horizontal line here, then we'll move to the right to try to identify why price stopped here. Moving to the left, to the right, sorry, left. So if we can see here, we had a break of structure here. We had a break of structure here. We had a break of structure here. So this now becomes the origin here with this candle. Let's delete this. This is the origin of this break of structure, and attached to this area we have this liquidity void or imbalance. It's a liquidity void. Let's measure this area and see what we are seeing there. Okay, so we have this liquidity void attached to this area. So price pushed down. So we are going back to our current location. So it came to partially filled part of the liquidity void. That's why I was saying that whenever we have a liquidity void, we at least target halfway. We anticipate price to fill halfway, it moves away, and then maybe later on come back to complete the job. So now, as we can see, the liquidity void we are identified on the left hand side of structure, that's where price came back to fill it and then had this change of character. So that is the understanding of this move, why price got to this area and then stopped. Okay, so currently we have price pushing up from this area. So it could continue from here because we identify it to be in an uptrend. So it could continue from here to the upside, but the zone that we would have been interested in is this area here, to target this place here, So these are the possible trade we could have taken if we had seen this earlier on. But nevertheless, on the whole, for the week, let's see what we can on the week. Yeah. So we identified this to be in a bullish run. So this here could continue to the upside, coming back to clear all this liquidity that is created here. But again, this is a possible trade that could have been taken to target here, to target this area. So yeah, so let's watch out and see what plays out, and then from there, the same analysis that we've been doing, mark your zones, and then once price get there, you pick your trade from there. That's it. So without much ado, we've already gone past so long, almost 2 hours into the session. So we'll end the session here. We'll end the session here unless someone have any question. Okay, any question before I sign off? Any question before I sign off? Any question? Okay. Thank you so much, guys. I believe this session was it was worth your time you spent here with me. I appreciate every minute of it, and thank you. And I believe this will be a good way to build up wherever you are in your trading career. And then in case you need any help, you can reach out to me, and then I'll be more than happy to help you to push on from wherever you are. All right, so thank you so much. Love to have you again next time. Love you all. Thank you. Bye.